Welcome to Chit Chat Stocks. This is our weekly Power Hour episode. I'm one of your hosts, Ryan Henderson, and I'm joined, as always, by the one and only Brett Schaefer. We've got a lot on the docket for you today. On these episodes, we talk all things financial markets, any news, any earnings. Costco just reported as of this recording. And there's also a little controversy going on with FICO that I'm going to be discussing. Brett's got a couple topics as well. As always, around this time, it seems everyone's talking tariffs. Tariffs were recently blocked, so we can talk about that as well. And then we've got a whole bunch of other topics that we're going to get to. But Brett, how are you?
Doing well, Ryan. Yeah, we're talking quantum stocks for one of my topics. And don't worry, we're going to be talking Nvidia as well. Well, you're going to get to our sponsor first, but I want to know the Costco numbers because I haven't seen them. So I'm going to be getting the update right along with all the listeners.
Whatever you're imagining the Costco's numbers were, they're probably just about right, would be my guess. It was a pretty
Okay.
predictable quarter, and the stock did not move at all after earnings.
All
But
right.
we're going
Still
to get to
60
all
times
that.
earnings.
Yeah, we'll get to all that and more in a second. Before we do, I want to talk about Interactive Brokers. Interactive Brokers is the professional's gateway to the world's markets. Interactive Brokers offers commissions starting at $0 on US listed stocks and ETFs with low commissions on other products, and there are no added spreads, ticket charges, or account minimums. Clients in over 200 countries and territories trade stocks, options, futures, currencies, bonds, funds, and more on 160 global markets from a single unified platform. Clients earn interest rates of up to 3.83% on instantly available cash and pay margin rates up to 53% lower than the industry. You can also earn extra income on your lendable shares, and IBKR's powerful award-winning trading platform helps every level investor succeed from beginner to advanced on mobile, web, and desktop. When placing your money with a broker, go with a broker you can trust. Make sure your broker is secure and can endure through good and bad times. We use IBKR here at Chit Chat Stocks because it is a phenomenal platform for international investing, and you can use them too by heading on over to ibkr.com. Interactive Brokers is a member of SIPC. Brett, where do you want to start?
Well, let's at least go over the Costco numbers quickly because I guess I don't want to leave the listeners out to dry. You had a good tweet from the FinChat account, I think, so maybe you have the numbers in front of you. How's the company doing?
Sure, let me pull this up. Uh, comp sales, total comp sales were up 8%. US comp sales strong, Canada comp sales, and that's excluding gas and foreign exchange. Um, Canada comp sales both strong. International was slightly faster. Total card holders grew 7% year over year. Membership fee revenue grew 10% year over year. All these numbers are good, and operating income grew 15%. So solid. Nothing out of the ordinary. The, I think maybe the thing that I've gotten wrong about Costco is underappreciating the runway internationally. They generate really good comp sales, and they actually have been able to add quite a few warehouses uh, in the last few years, more so than I would have expected. So I think the reinvestment runway was something that I maybe underestimated. The businesses, I mean, the whole cat's out of the bag. Costco's a good business. It, it generates great returns. And their warehouses have just incredible uh, sales per store, which having the membership model ends up resulting in just the whole scale economy shared, where you can kind of just perpetually be the low cost provider and continue to reap the benefits. Uh, I was running the numbers. Can you guess how much an individual Costco warehouse does in revenue on an annual basis?
250 million.
It's nearing 300 million. So close.
Oh, pretty good.
But yeah, it's just kind of astounding to think about. But yeah, I mean, the quarter was good. Nothing really, like, no huge takeaways here. I think the stock was literally up 0.32% after hours, one of the most negligible after hours stocks around.
Yeah.
Not much to talk about here. It's still way too expensive for me to get interested. And frankly, I don't see how investors make a whole lot of money here over the next 10 years, but a hell of a business.
Yeah, not sure it deserves to trade at 60 times earnings, but maybe 40, 45 might be fair value. Trailing numbers, who knows? It's a rock solid business. But Ryan, yeah, we got a lot of other stuff to talk about. Have you heard of the quantum computing stocks?
No, well, as a basket, yes. I thought it was funny and telling that apparently Jensen Huang, the founder, co-founder, and CEO of Nvidia, one day he said we're like a ways away from quantum computing at
And
some
what does he
conference,
know? Why does he know that?
and and a bunch of the quantum computing stocks dropped on that news. And they asked Jensen Huang about it, and he was like, "Oh, I didn't know there was quantum computing stocks. Sorry." He's like, "I didn't know there was anything out there that was a stock trading on that,"
Right, right.
which
Yeah.
maybe goes to show the state of those businesses.
Do you want to see some of the numbers? All right. There's 4 of them. And I know people like these stocks because they're the most trending articles on the Motley Fool, and you're making me a little bit of money with those bonuses. IonQ, Rigetti Computing, D Wave Quantum, and then my favorite one, Ryan, Simply Quantum Computing Incorporated. That sounds like what's the one from The Wolf of Wall Street? I forget the guy's name. When he's pitching the
Oh,
shed and getting people to get 50% commissions on that. It also reminded me that, and I forgot about them for like a year now because they reported earnings C3 AI when you just want, the tickers AI, the names AI. All we want is the most theme as possible. And these are some of those dangerous stocks generally out there. Now, in the last year, Quantum Computing Incorporated is up 1,680%. D Wave Quantum is up 1,340%. Rigetti Computing is up 1,200%. And IonQ is up 464%. Kind of a big loser there. Their combined market caps, Ryan, to $22.8 billion. Combined revenue, 73 million. So that's a price to sales, I think, in the 300s. And combined free cash flow of negative $275 million. So very, very negative margins. You might be asking, since quantum computers don't really exist commercially, they're all just science projects.
yeah, how do they
Do these
make
companies have a
money?
business model? No. But,
What's the revenue? Like, where does
well,
that
they're
come from?
selling like services to build quantum computers, and they're working on it, and they have, say, government contracts to fund their research into quantum computing because it does have, I guess, so much promise, and it has been 5 years away for multiple decades, but they don't really have a business model selling to customers.
So are
My
these just
question is,
research houses? Like,
yeah, these are essentially like a research division at a university or a company. Public. It doesn't make much sense. Like, let me if Google or Alphabet spun out their quantum computing division, would you buy it? No. I mean, you have no idea when they're gonna get it to work. I think these stocks are absolutely insane.
yeah, I mean, it makes no sense. The uh, you're basically buying a research house that has no legitimate business model at the moment other than getting paid for research, which has a finite life, and I'm guessing the government's
Never
one
gonna
of
be
their biggest
profitable.
customers. Yeah, it's yeah, not gonna be profitable, and let's say it is. Let's say they've got those research grants or whatever as their revenue line, like, still, it's 70,000,000 in total between those businesses.
Yeah, even if
300
they get it
times
to
sales
work.
is nothing for yeah.
And look, you're competing against Alphabet, Amazon, Meta. You're competing against basically every big tech company, possibly not Apple. It seems like they don't really invest in a lot of these advanced tech things, but Alphabet can pour billions of dollars a year into this. It doesn't matter. These companies are on the way to bankruptcy, and they're
Yeah,
just turning into these meme stocks. It reminds me of 2021. There's a lot of that energy right now, early 2021, even if it's not. the general news cycle craziness of AMC and GameStop, I still think the price action is insane.
Yeah. Would you rather, if you're buying these stocks, here's my question to you. Would you rather own the startup, which sure has all the potential in the world, or let me phrase it this way: who has a better likelihood of success? The company who can pay researchers $500,000 a year just to do research, and doesn't even make it's a rounding error, and has infinite resources and money for compute, because my guess is this is really costly compute wise. Or do you want the one
Research wise,
that's
yeah. I mean, yeah.
yeah, or do you want the one where they're struggling for the resources and have to scrape together a pitch for the government to get grants every single time they want to keep the business alive? Like, I would be betting on the divisions within Google and Amazon way more so than these businesses. But
And who knows if this technology is ever going to work. It reminds me of a stock called Plug Power, which is a funny one. That's just a classic in the pump and dump realm where they're like, "Oh, we're working on hydrogen tech." I think that's what they are. Oh, no, no, yeah, we're working on hydrogen tech. Don't worry. I think within a year we'll get something going, and then it just never happens. This is the type of companies that are so dangerous to invest in. We have some other questions here. Have you heard of the taco trade, Ryan? I'm sure you have.
of course,
Yeah. It's a bit of a reverse psychology thing. We have a question from Tyler in the chat. Thoughts on how reporters making the taco trade, which I think is Trump always caves or chickens out? No, Trump
chickens
always
out.
chickens out on tariffs. So, thoughts on how reporters making the taco trade known to the president will affect the taco trade? Yeah, it can't be positive because he seems to be a very uh he doesn't like, I guess, having his manliness called out, and this is the exact
Yeah.
wrong thing to do.
Yeah, this is definitely not the kind of person that you want operating with a bruised ego, uh, and saying that he doesn't really have the willpower, the strength, or even the ability to keep these tariffs in place, and, like, backing him into a corner in a sense is it's a recipe kind of for disaster that he's probably going to try to do something outlandish to make his claims come to fruition. But so far, we haven't seen any sort, unless I'm wrong, because he's in the news every day, so I might have missed something. We haven't seen any sort of outlandish reaction that's like trying to reignite the tariffs in a way.
Yeah, and that brings up a good point. I guess we probably should talk about it since it's too much tariffs. I don't want to spend too much time on it because I'm just sick of talking about it. I guess tariffs are blocked. I only have a couple bullet points here for anyone that wants clarification on what happened. A court has deemed that the president of the United States does not have the sweeping power to put tariffs on virtually every nation. The executive branch used an act from previous, I think it was in the 70s, declaring there was a national emergency so the president could delegate tariffs, but the court said there wasn't a national emergency in this case. However, it doesn't mean all of the tariffs are in flux or could be deemed not illegal, but like something that the president can't do. It would have to be go through Congress. There are still room for sector-based tariffs for national security reasons, or if a country uses unfair foreign trade practices, which you could maybe argue for China. That's what they have done previously. So I don't think this actually eliminates much, right?
No,
And does this sorry, you go ahead.
no. If I think some tariffs will be put in place against specific countries. Maybe they say we made some deals with other countries, but I think the countries that would be most impacted, like, okay, let's say we get I remember Madagascar being one of the ones that was, like, the most insane because it's, like, they
They
have
hit everyone and they don't really trade. Yeah.
yeah, and let's say whatever the country is provides a good to America cheaply, but they don't have the, like, income or spending power to buy anything from us, so I assume that a lot of the instances like that will just be said, like, "We made a deal," and those will kinda just die down and nothing will happen. My guess or my instinct is that this is the ones that are put on China are going to be there's more to it than just economic policy. Like, there's probably more national security, uh,
Yeah, and they could
type
argue
issues.
they could argue both of these, I guess, that are some different sort of rule. I think it's something 232. It's a lot of jargon, but you could still see semiconductors, pharmaceuticals, and these specific countries. Number one is China. I was going to ask this question about, does it change anything about how you invest? I was gonna say no, but now that you talked about the specific tariff still maybe being on, I think it maybe helps some of that reshoring narrative in the Latin American countries, specifically Mexico, not getting targeted. Saves them from this.
Yeah, yeah, maybe. I don't think it hurts those countries in any way to have the tariff narrative still be around, or even if tariffs do. c- I think those nearshoring is has been happening for a while and will probably continue. So this maybe supercharges it a little bit. If as a shareholder of the Mexican airport, OMAB, I hope so. I think they benefit. But yeah, it doesn't change much for me. I I've said this before, I think, on this podcast, and I stand by it. If you and this is the taco trade, but if you invest and just operate your investments on the basis that no president, Trump specifically, but no president wants to weather a major drawdown in the indices because nothing puts pressure on them like that. It seems like people, whether it's right or not, measure presidents by their stock market returns because they treat it like like the economy overall. So I think the bad headlines only last as long as the market lets it.
We'll see. I'd say I'd just rather invest where tariffs are not going to affect it. I'd still have the same.
There's only so many businesses that are, well, if you just do sweeping global tariffs, like it's hard for a company not to be affected.
Yeah, but I don't know. My portfolio's done fine this year. I think it's because that
True.
mindset.
The only answer is buy Philip Morris.
Philip Morris is one that is, yeah. I'd also say companies that are entirely not attached to the United States Chinese supply chain. Yeah, I think nothing changes there. But uh, we can't. I'm sick of talking tariffs. It's just we don't know what's going to happen. So as investors, you kind of put your hands up, predicting what's going to happen. I think it's impossible. Ryan, you have some topics that you brought to the table this week. What one do you want to do first?
Let's talk FICO because I think this is timely. The stock is down. It had basically its biggest drawdown in a like 3-day span, maybe ever. I guess I didn't go back to '08 to check, but the over the last week, the stock is down 32%. Actually, that's less than a week, and it's all been centered around this conference last week. So, um, I'm not sure what the name of the conference was, but it's some industry conference. The director of Federal Housing Finance Agency, the Federal Housing Finance Agency, Bill Pulte, gave a speech about housing affordability. Yes, that is the Bill Pulte of Pulte Group, one of the largest home builders in America. I believe his dad actually founded the company, uh, which I kind of the incentives here are a little misaligned, I'd say. If you have like an economic tie to a big home builder, of course you want generally affordability to be high because you want volume to be high. Anyway, as part of that speech, Pulte said that there are a number of levers they are looking at to try and bring the cost of buying a home down as much as they can. One of those levers he explicitly mentioned was the FICO score. He said that the FICO score should be, in quotes, as economical as possible.
For who?
Yeah. He also mentioned that the FHFA, which is the agency he runs, is now reconsidering the buy merge transition. Some of this is first time I'm hearing of this lingo, but it means conforming Fannie and Freddie mortgages so that you would only need 2 credit reports instead of 3, which could affect the amount of volumes for FICO scores if you don't need the FICO score potentially as much. So those comments sent FICO stock down 32% in less than a week. Now, how this ultimately impacts FICO really remains to be seen. But the big takeaway is that there is regulatory pressure on this business. I think there has been for a while, but to like kind of give some context here, in 2018, FICO renegotiated their contract with the credit bureaus and it allowed them, quote, special pricing increases. This is a difficult industry to understand, and there's a ton of moving parts as well as regulation. But essentially, this contract change allowed FICO to start pushing price increases at a rapid pace. And it's not like they are as discreet about price increases as they kind of can be because they don't want to like draw attention to themselves. But it's not just like one price increase across the board per se. It gets like the price increases go out in different levels to different cohort groups, that kind of thing. Anyways, ultimately, this has driven like insane growth for FICO. The revenue was growing kind of at a stagnant rate up until 2018, and then it's just exploded. Brett, maybe you can share this chart. There's the scores revenue and operating income. Shout out to FinChat. They track this segment specifically, scores, which by the way, I learned today that the scores business has 88% operating margins, which might be the most profitable segment of a business I've ever seen. Yeah, he's sharing it here. You can see that basically in 2018, it jumped from 330 million to more than $1 billion in scores revenue. But so they took up price really quickly, kind of because they were playing catch up. Apparently, the old contract had them like limited in terms of how much price increases they could do. And now they've just gone kind of insane mode with the price increases. So this has drawn a whole bunch of attention. My knee-jerk reaction here is, okay, 90% operating margin business, deeply embedded in the world of finance, especially the mortgage world here in America. And it dropped, I think, like 40% from highs in less than a month, 30% in a week. I kind of like, and based off of like just talk and conversation at a conference, I was thinking this could be, a potential buying opportunity. Then I went to the valuation. It it at its peak this year had an EV to free cash flow of 100x. Now, keep in mind, operating income is growing fast because of these price increases. It still has, maybe I can quickly check this on FinChat. I believe an EV to free cash flow above
I'm seeing
50.
PE of 72. Do you want to guess what FICO stock is up in the last 5 years, excluding? I don't think they've done any special dividends, excluding dividends.
700%.
318%. But I think long-term shareholders are probably not too concerned, although this story could get worse. I think the thesis was that right now, home buying is velocity, what is it? Yeah, just the amount of homes getting bought and sold right now are kind of getting frozen because of this mortgage rate spike and unaffordability that has happened for the last few years, and that's affected their volumes, and they've taken price. And then when the volume eventually comes back, that'll help them grow their earnings again. But maybe they were too aggressive here. What's weird is that you look at the actual costs that home buyers and sellers have, and this is a small part of it. It feels to me like the scapegoats in the situation. It's almost like how people blame housing unaffordability on Airbnb, and they go, "Oh, we left the city. Okay, nothing changed." Like if you got FICO out of the whole equation, the big issue is the brokerage commissions, and I think they should go after that. However, we don't live in the world that we want to live in, as we like to say. We live in the world where they are attacking FICO, and this looks like a crazy risk for the business.
Yeah, it's such a the FICO score itself is such a microscopic part of buying and selling a home. And it just yeah, it does feel like they're the scapegoat, like you can point at one thing, but I the fact that home prices are the least affordable that they've ever been, I believe that still holds up if I'm not mistaken, Brett. The and part of that is just the rapid expansion in mortgage rates. Home prices have not reflected the increase in rates. So that's and I think we're starting to see that more and more. At the moment, we're seeing it in transactions, right? People just simply cannot afford to buy the home at the same price, all else equal when mortgage rates go from 2% to 8%, whatever. Not as many people can afford to buy the homes. We're seeing that. Eventually, I think that comes through in pricing. Probably has happened to some degree would be my guess. I'm really not looking at the macro data. If not, it'll continue to come. But the idea that you have to pull some lever and point specifically at one company just feels wrong to me. Like that's the problem. Like this is a it's
Yeah, it's
it
not
is
going to
such
change
a
anything.
small part of the transaction. So small.
Yeah, yeah, I agree. I
Anyway,
agree. Someone says in the comments, blah, 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 you guys sleep on commercial segments and how powerful AI will be for FICO. Says Brett, you better buy FICO. All right, well, maybe maybe I should research it then. I don't know much about this business except for the fact that they were attacked this week from the regulators. Says Fabio from Capital Mindset is buying it. Hey, maybe on a forward-looking basis, it's much cheaper than we think. Who knows? It could be. Do you remember the stock Verisign, Ryan?
yeah, the like
That's an
plumbing of the
interesting one.
internet.
I think it's in a similar spot where they have negotiations over price hikes and then, oh, okay, the coast is clear. All right, business as usual.
Yeah. Yeah, we'll see if anything really comes of this. My hope here was that like the news doesn't really mean anything and that this is insanely cheap because that's kind of I like to buy I think I've had a lot of success when there's some sort of regulatory concern with a stock and it creates this like huge drawdown and the business is really high quality and intact and it doesn't really affect anything. In this case, you're still buying it at 70 times trailing earnings, which could be a lot different than forward, but that's just not that appealing to me. There are very, very few businesses where I'm willing to just ignore the face multiple unless there's like some blip on
Yeah, but
trailing
forward
earnings.
is what matters. If their earnings are going to double, maybe it's cheaper. But I just don't know if
Double
earnings are
when?
going to double.
Like, are they gonna double next year? Okay. It's 36 times earnings. It's still not crazy cheap.
I mean, that would be fair. That'd be a solid for a company with a lot of pricing power. But who knows? If, again, that pricing power might be going away.
The
Yeah,
thing
there
is
are definitely
every
some risks here.
if the big lever for them to pull is pricing for earnings growth, which is what it seems like it is and has been over the last since 2018. If that's the big lever for them to pull, that's also the lever that attracts regulators the most. So I I do think the regulatory pressure is probably legitimate here, and playing catch up on price increases maybe wasn't the best strategy, but we'll see. I honestly don't know the industry well enough to really have a take. I do little stat for you, Brett. I think you saw this. I think you might have posted about it as well. Hermes, the largest luxury company in the world, surpassed LVMH today. Thoughts?
I did tweet about that. Yeah, it's a thing. LVMH seems to have diluted some of its brands from a luxury standpoint. And at the same time, I saw this actually in an article in the Wall Street Journal this morning, taking a lot more price. I forget the exact numbers, but over the last 5 or 10 years, the average price of, I think it was a Chanel, maybe Chanel's a different bag that isn't known. I think it may have been Dior. I don't know. I don't know these brands. They took like 70% price on the same, type of. bag, where Hermes only took 30%. And as we talked about on our episode with, this was a while ago, on Hermes specifically, and the one with Leandro from Best Anchor Stocks and Sleepwell Capital covering the luxury business, I think that's aged phenomenally. And you can still go listen to that right now. Hermes only takes price upwards of their labor and supply costs. So they have bags that still cost $10,000, but their greatly limited supply means on the aftermarket, these bags are worth $20,000, $25,000, $30,000 for resellers. And that gap shows how much embedded pricing power there is left, where an Hermes can just grow their price probably 3% a year for the next 30 years and never see a impact to their demand. Whereas LVMH brands, were way aggressive with price and they don't have that brand quality. So makes sense to me. It's a better business.
On that note, LVMH current enterprise value to last 12-month EBIT 13 times. Any interest?
Somewhat, but it's a little big.
It's still apparel. Like, it's still the merchandise business.
Somewhat, yeah, somewhat.
Apparel,
Some of
retail.
their brands are not as some of their brands are not as good. Louis Vuitton is still, I think, a great brand, but I'm not knee deep in the industry.
Yeah. There's just something about it that doesn't interest me. I still kind of feel like it's sort of faux luxury. Like, it's not limit supply Hermes level luxury, which it's hard to get to. It's hard to build a brand like that, sure. But when you push price on something that is sort of faux luxury, I think you end up in sort of a difficult situation volume wise. I put out this question this week looking for basically, I said that I've kind of found myself moving more and more towards companies that are run by young, hungry founders with high insider ownership. And I actually got a lot of great response. I asked basically, what other ones should I be looking at? And I said the three that I own are that I kind of would qualify as that basket of young, hungry founders is Coupang, Airbnb, and Remitly. And I got some great responses. Meta won, even though I know that's like cat's out of the bag on that one. But did you know Mark Zuckerberg is actually younger than Brian Chesky?
Well, I didn't know until I saw your notes, but that is surprising. He
Yeah,
founded it when he was a sophomore, sometime in college. So I guess that makes sense when you think about that. But he's been in the limelight for much longer. And did you see today, Ryan, that Palmer Luckey came home? You know,
I did.
I
Yeah, I
guess
did. I don't really follow that. Anduril? Is that what it's called?
Anduril. Yeah, they're
Yeah,
like
I
a
don't know.
startup defense contractor, I guess, for real world stuff, similar to Palantir, but they do drones stuff, attack field. I don't know what their exact products are, but he was fired from Meta over some sort of political view back in that day when that was no go in Silicon Valley, and now they want him back to work on, I guess, AI, AR, VR for the military. So interesting
Interesting.
developments. That's something you would not have predicted
No.
5 years ago, maybe 10 years ago, whenever he got fired. Now that's someone that I guess is a founder, but it's not public yet. So that could definitely be in the category. Although similar to Palantir, I think that stock will be wildly overvalued if it goes public.
Yeah.
Um, what else do people name though?
Robinhood, which
Oh, that makes me cringe, but the stock's up 700% from the lows, and Travis came on the show actually to yesterday for asymmetric investing in that one. It's a good business. It's not a bad business.
no, and Tanev, to his credit, has done well these last couple of years specifically. He obviously, I don't want to say, I think there was some brand tarnishment that happened in 2020, 2021. And part of that is probably he's responsible for maybe, but he's improved, I think, the image of the company and his own personal image over the last 2 years. Bank is another one, and then 2 that I had not really looked at ever. One of them I've never even heard of, Exometry. Have you ever heard of this
Geometry?
business?
Nope, I have not either. I'm looking up the stock.
Xometry. Uh, One of my favorite personal investors, Mario Sabelli, was actually the one that mentioned this,
It's an
and
on-demand industrial parts marketplace from Bethesda, Maryland. Hmm, okay.
yeah, I mean, when he recommends something to look at, I look at it.
Sounds
Eh,
similar to Fastenal, but maybe it's different.
yeah, I have no idea. The last one I'll mention here, Terravest, serial acquirer, I think, of industrial, like niche industrial businesses in Canada. A lot of people love them, and there's been some very successful Canadian serial acquirers in recent years. Terravest, in particular, has been a very successful one. There were some others as well, but I'm curious what that has not been listed here comes to mind for you when you think young, hungry founders?
Spotify, Axon, maybe. I don't know. That guy's that young anymore. I like Tariffs though. It seems like a lot of smart people are in it. I guess so that's not guaranteed that's gonna work, but one that yeah definitely could be a fun one to research for the show. I think there's the next stock I'm researching, which is the real brokerage, little small cap. I think potentially real estate disruptor. I haven't bought it, never owned it. Don't know if I'll ever be buying it, but there's one that it may have the founder running it. Let's check it out. Shows I haven't done my research yet. Besides that, I don't know. It's kind of hard to come up with the top of your head. You can't really filter for it on a screener. Maybe if the FinChat AI gets good enough.
Yeah,
Eventually one day, but that's probably
maybe it's
pretty hard
possible.
at the moment. Let's see. Governance, executive management. Yeah, co-founder Tamir Polek.
Real brokerage.
Well,
All right.
the
Yeah.
real brokerage could be on there too.
Any of the ones that were listed as replies to me that you would consider kind of as a next research project?
Well, New Bank I already researched. Terravest for sure and Geometry. Yeah, Meta probably not. Everyone, you know,
Is there any
covers that
world
one
where
too
you
much.
would
Robinhood, everyone knows that company.
Okay, so I sometimes when a stock goes and 3x's or 4x's, I find it just impossible to buy. Meta is kind of one of those. Off of the lows, it has jumped a ton. It was trading at like 6 times trailing earnings on trough earnings, and then numbers just exploded. Is there any world where you would own Meta now?
Maybe, but it's just large. I don't at the right price, sure, but I don't care for the giant companies.
Fair. All right.
Yeah, that's just it's a good business though. Nothing wrong with holding it.
Before we move on, I want to talk about our friends at the Blue Chippers Club. Blue Chippers Club was started by 2 friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside the community, everyone gets to share, break down their portfolios, pitch stocks, receive feedback, and participate in weekly calls. I've really been enjoying the weekly calls myself. It's a great way to get new ideas out there, receive new ideas, hear feedback, and Brett and I, we talk all the time. So I think sometimes our opinions just become the other person's opinions on certain companies. And this way, it's nice to get sort of a fresh perspective as well. Like if you don't have anyone that you sound ideas off of, this is really a nice place to do it. So it's bluechippersclub.com. If you're interested in joining, head on over and hit apply. The link will be in the description. One more time, it's bluechippersclub.com. What topics do you want to go to next? I want to talk remittances.
Okay. Well, what about Nvidia earnings? Gotta hit some trendy stuff so people
Of
listen.
course. Let's do it.
Stock up about 4% today, I think. Market cap $3.45 trillion. Are they still in the lead ahead of Microsoft? No. I guess Microsoft, well, maybe it needs to update. But Microsoft and Nvidia neck and neck in the market cap race. Total revenue was up 69%. Gross margin kind of fell mainly because of the Chinese inventory write down, I think, or I guess they can't sell some products in China anymore, so they had to write that down. Operating income was up 28% year over year, so we see 69% revenue growth, but operating income, quote unquote, only up 28%. That earnings margin is coming down a bit. Trailing PE from what I'm seeing is 48. And it seems like for the last 5 quarters, however many quarters, Nvidia has been in that no man's land for myself, where you go, well, if they keep growing at this pace, yeah, this valuation makes sense, but it's like, all right, it's on such a roll. They're dominating this industry, but the PE's at 48. It's like, is it a buy? I don't know. It feels like I'm just gonna sit on the sidelines. But what were your thoughts, Ryan?
Yeah, I felt that way for a while. The the part that has surprised me is, I think, sort of a year and a half ago, maybe it was 2 years ago, when the data center business just really started to soar. I thought, yeah, okay, how predictable is this? Can this actually last, or is this sort of a temporary bump? They have so far proven that this is more of a long-term tailwind than just a temporary blip. And I would definitely say personally, I found myself leaning probably more and more towards this is, and I'm kind of talking about AI overall here. The spend is maybe slightly ahead of itself, but long term, I'm optimistic that this will be much higher. Like if we look out 5 to 10 years, I think Nvidia will have more revenue, which is to say that AI spending will continue to grow.
Someone asked best guess on Nvidia gross margin in 5 years. I'd say probably a little lower because someone like Taiwan Semiconductor has been saying they're going to hike some prices, especially for stuff made in the United States, but just going to be more and more and more. And whenever supply eventually meets demand, which I mean the supply from NVIDIA chips to the demand from the data center builders, I would think gross margin will also come down slightly. But look, it's still a very, very high gross margin business today. So it's not going to kill the business. Just seems like that's classic um, dynamics of what happens during any capital cycle.
Yeah. I wouldn't fret too much about gross margins, would be my thought. Like
Well, if you're
gross,
buying today at 48 times earnings, yeah, I'd fret.
yeah, I think gross profit probably matters more as my thought. They like, yes, obviously margins are a part of that, but if you are directionally right and right in terms of like your growth rate assumptions, that's going to matter, I think, more than purely just looking at the margins. The one question that I'd have, and initially, I think I went into this looking at Nvidia. If we go back and listen to our podcasts when things were going crazy at the start, I would probably sound super naive. And a lot of that was, well, all throughout history, competition has come for the leading semiconductor companies. Do you think it's possible that Nvidia is so far out ahead, especially in this vertical, that nobody's going to catch them?
Not sure. Possible, but it seems like there's a lot of companies investing to reduce their dependence on Nvidia, and we'll see if they can get there. That's another founder-led company that the head guy, Wong Jensen, I guess people just call him Jensen. He has a maniacal focus to win. So they've been ahead. Seem to have people argue they have a wide moat. I guess I would be slightly worried, and I still think that Amazon and Alphabet's the most ahead, and Microsoft's the most behind. So maybe Microsoft will never get there because they're so far behind. But Amazon and Alphabet have invested a lot in their own chips. It hasn't affected demand so far. I guess I just don't once the again supply catches up with demand. That's when we'll know steady state of what's going to happen here, and we see as there's so many moving parts. I still don't trust Sam Altman. I still think he's crazy. They're building a $500 billion data center in Texas, and you got the Gulf states. Well, I think just the UAE committing to huge chip spending for I think, absurdly big data center out there. I don't know. We might, if we say that they're dominant, we might look dumb in 3 years. It still goes right into my too hard pile. I have easier 1 foot hurdles to go over.
Yeah, and if it's in the too hard pile and it's the biggest company in the world,
Right.
you kind of got to ask, is the mental effort worth it? Because even if it does 3x from here, if you could, I think, exert that mental effort on maybe another company that's smaller that might have higher upside potential. On that topic, you're talking about throughout this episode, we've talked about different sort of businesses under Google's hood. And we talked about quantum computing. We talked about them designing their own chips. I was thinking about this the other day because I'm starting to get wary, or a little bit of cautious, I should say, about my recent Google position that I bought. Do you think if the search business measured by search revenue is exactly where it is today in 10 years, so it doesn't grow at all, but it's flat, do you think Google can still be a good investment?
Sure. Definitely. It generates a lot of profit, and you're going to see increasing profits from Google Cloud, probably from Waymo eventually. Yeah. And then add on YouTube. What else am I thinking? What am I missing? Yeah, sounds about it. And then Gemini. Any sort of the AI stuff that seems to be fairly successful. They're still trying to catch them on a usage basis versus Chat GPT, but the products they're putting out, from what I've read, are best in class.
Yeah, I'd like to think that as well, that things can work out even if it doesn't grow. What if the search business were cut in half?
I don't know. I'd have to have the numbers in front of me. I'm not exactly sure.
It's about 50% of Google's revenue at the moment. So,
Someone says we're missing cloud. I mentioned cloud. I think I just said it weirdly. Yeah.
hey guys, what's your views on the Elf acquisition? I saw just a headline that they acquired, I think, some celebrities'
Yeah.
cosmetics brand.
Justin Bieber's girlfriend.
I think wife.
Wife. Yeah, yeah, because her last name's the same. Yeah, yeah. That's how for $1 billion. And wow, the stock's up today. That doesn't make any sense. When you have to buy a direct competitor because your sales are faltering. Yeah, this is not. Elf isn't. We did a full research episode on them, and that is within my circle of competence, I would say. And I think our takes aged well. We have no idea when revenue was going to slow down. It did. There's no moat here. This is not a business I would touch.
In that same vein, you know what business is doing pretty well? Ulta Beauty.
Really? Well,
Transactions
they're selling
growing.
both. No,
Yeah.
yeah.
Transactions, average ticket, both growing. They're adding more stores. Comp sales are like 3% right now. I think that thesis, that very simple thesis that people are always going to want to buy makeup regardless of economic conditions, was a sound one. And Ulta has and probably will continue to benefit from that. Unless you have any other thoughts on Nvidia, let's talk remittances.
All right. Yeah, someone asked us this on Twitter, so we wanted to address it. I guess we've talked. We both own Remitly. Ryan owns Wise as well. We're very interested in kind of the disruption within the remittances space and fintech in general. So the new spending bill in the United States, I guess, done a lot of politics for our international listeners. Hopefully you don't bore them, but it's related to these companies today. It has a new 3.5% tax on outbound remittances. So if you send money as a remittance to another country, you get a 3.5% tax that you're supposed to pay. Now, according to this study done, and it's not guaranteed to be correct, but it says research by someone suggests that for every 1% increase in the cost of sending remittances, the amount sent falls by around 1.6%. So if the tax is 3.5%, that could lead to a 5.6% drop in remittances. Now, that might sound bad, but I don't think it's a long term concern for someone like Remitly and will actually inspire more individuals to think about their high cost remittances from places like Western Union and search for more cheaper digital providers. The other downside might be crypto. Now, you can evade these taxes altogether. I think some people might do that. Again, I'm pretty sure that's illegal if the bill passes. So I'm not recommending you do that, but I think some people might. But I don't think a large chunk will. I don't think people trust that, especially if you're sending money home to grandma. And the tax law is not guaranteed to happen either. So I think this is a lesson in you want to invest in the market share taker, you want to invest in something that's cheap, you want to invest with a margin of safety, and you don't want to invest in what I think is a huge value trap in Western Union. I think this could be another death knell. That's the right term for if this bill goes through for Western unions because of their precariousness of their position. More and more people around the world are using smartphones. More and more people are going to switch to Remitly, competitors, Wise, all of them. And I think the market share takers, again, market share takers, that's the biggest lesson we had from learning from Peter Lynch. Market share takers will survive because even if the industry growth takes a hit, they can still grow by taking share from competitors.
Yeah,
That sums it up right there.
I think you've got all the right takes here. It it probably will have some impact on the amount of volume that the average person sends back home wherever they are or wherever home is for them. But is it going to stop payments altogether? Like if you're sending money back to a family, let's say you're an immigrant into the States, you've got a high paying job here, and you're sending money back to your family in either Mexico or India or wherever it is. I think those are some of the most common corridors. Are you just going to stop doing that because there's a 3.5% tax? I doubt
If
it.
there's 20%, maybe,
Yeah.
if it was really high.
Maybe this does accelerate the push to crypto. I think that's kind of been one of the common critiques of digital remittance providers, but it's yet to impact their business in any way from what I've seen,
I
really.
think that most people still don't trust crypto, as I wouldn't if I was gonna send something. Think about all the money that gets stolen constantly.
Yeah, and also you're often sending it to, especially in Remitly's case, sometimes it's cash receivable, right? Like people on the other end are not just taking it into their direct bank account, whatever. Sometimes there's different ways to receive it. So maybe some of the people on the receiving end aren't that digitally savvy, and I definitely don't think they're that inclined to get a crypto wallet and figure out how to transfer different cryptos to make this happen. So
Right. Someone
all
said here
this
Trump coin is gonna be the remittance standard, I hear. I think
yeah,
they're joking.
maybe that's the goal. The
That's the bear case.
but I think you're right. This does probably hurt Remitly a little bit in terms of
Yes,
volume,
just a
but
tad.
it certainly hurts Western Union and some of the other legacy players more. And I would say this is actually a net benefit to Remitly. If when things when it becomes more costly to send money, then you start focusing on the lowest cost provider more so than you have been in the past. So yeah, I agree with your take. And maybe that's because I own Remitly and it's a big position for me. So I want to think optimistically. But
So a
no,
big position for me as well. And I just looked it up. I didn't even check. Stocks back down to $21 a share. Yeah, it's definitely one I'll be adding to. I think it's perhaps the top of my list of existing buys now that Coupon has gone on a nice 50% run in the past month.
Yeah. Yeah. I still think they're in a really good position to continue to earn more customers. And if you're a customer that's been like splitting volume, probably earn more volume from those customers as well. So yeah, I think maybe it hurts them this quarter. Maybe, probably not because the tax hasn't been in place. But maybe like short term, there's a slight impact of volumes. But I would think long term, this is a benefit for them.
Okay, we can't forget your small cap of the week, Ryan. I think we actually didn't do it last week too, so let's hit it. And what is it? Why did you look at it? I think a listener suggested it as well.
Yeah, this is just not a small cap. So sorry that I grouped this in as my small cap of the week. I made it kind of in jest as Ryan's future small cap of the week, but it's Align Technology. The only reason I say future small cap is because the stock's down 75%. It's not a take on the stock. A couple people, I believe, asked us to talk about this. You sent me it over and thought it might be good for a little quick research
And
report.
some people in our free chat over on Substack having some great conversations on that. So join that link in the show notes as well.
Align Technology and its namesake Invisalign product, that's like their biggest one, have been the leader in the clear aligner category for nearly 2 decades. The If you look at clear aligner shipments, which is a KPI that FinChat tracks, once again, FinChat is really nice for getting up to speed on a new company. You can use our link, finchat.io/chitchat, gets you 15% off. Anyways, clear aligner shipments have increased, I believe, sevenfold is what it comes out to. I always get this mixed up, but basically 17% a year since 2012. There was a huge pull forward during COVID. So I guess a lot more people went out, purchased Invisalign and clear aligners. Maybe it was the fact that they're staying in. They felt more inclined to have work done or something that they aren't as paranoid about it having it publicly kind of thing. And when you saw volume go from 1.6 million clear aligner shipments in 2020 to 2.6 million in 2021. So just a huge pull forward. And since then, it's kind of it dropped in 2022, was still down in 2023, and we're just now getting back to the volumes that they saw in 2021. According to a write-up I found online, Align has, here's the quote. It says, Align has an actual competitive advantage as its database of 17 million completed cases provides unmatched insight into how teeth more relative to aligner construction. I might have missed a word there. Anyways,
Essentially, they have a database to help with future teeth.
yes. And it helps kind of inform the construction of other trays, is what they call it, basically clear aligners. And it says individual treatment programs are developed between the doctor and Align ClinCheck technicians, and when agreed upon, trays are printed. The the big issue that the stock has encountered, because it is on that 75% drawdown, is that Align kind of invested into that 2021 growth. So when they
Meta
saw that,
platforms, Spotify style. Yeah.
yeah, and when volumes dropped in 2022, all expenses still grew. So every single expense line, R&D, operating expenses, G&A, gross or cost of goods sold, all of them continue to grow. And they've actually still grown every single year since. So it's kind of crushed margins. So peak Q4 2021, they were doing basically $1 billion in operating income. Today they're doing 660 million. Today, and it's kind of grown, I guess. It's been stable, I guess you could call it, over the last 4 or 5 quarters. But it if you believe that Align still has the same competitive advantage, which seems to be a
Yeah, it
reasonable
seems like a wide
belief.
moat stock, I think.
Yeah, I don't see why this is what's prohibiting anyone from owning it here. If you have the belief that this is still competitively advantaged business, they trade at an EV to EBIT of 18 times. Clear aligners should continue to gain share from traditional braces. That's been happening for the last 2 decades. I don't see why that would stop, and they can continue to increase their average selling prices, and it's kind of the known brand as well among consumers, Invisalign is. So, I would think volume should grow over time. If you believe this is a wide moat business, I think it's well worth the research.
All right, yeah, I'm just looking at our chat now. We had a guy named Matt MJF, don't know if that's his real name or a pseudonym, gave a nice one pager description, moat management, capital allocation, and all the quantitative highlights. So, hey, go check that out and use that as well. Yeah, I like it. I think it could make a lot of sense. You could have some earning margin expansion coming back. They keep taking market share. The product's clearly better than the historical one. Hey, one thing we don't know, I guess you haven't maybe didn't look at capital allocation. Are they buying back? What's is that a positive or a negative for the management team?
Yeah, I didn't look at it. I will also say pretty good Morningstar report on Align Technology, worth checking out if you're doing your research, which is included in all subscriptions for FinChat. So another shout out there. The Let me pull up the buybacks.
Yeah,
See.
you speaking personally, I had to get braces and then it didn't work. So I had to get Invisalign. I got it for free since the orthodontist screwed up, and Invisalign is much, much better, as I'm sure plenty of listeners know as well.
Total shares outstanding. Let's go quarterly, down 6% since
Cumulative?
over the
Okay.
last 3 years. So about 2.5% decline annually.
Eh, that's all right. Better than up.
Hey, yeah, I mean, 2.5%
Better than
decline.
up.
That is helpful to earnings per share. If they can grow earnings at a market rate, all else equal, and they can buy back 2.5% of their stock every year. That's helpful.
Yep. I agree. And we had another fallen soldier in Alexandria Real Estate Equities. Someone recommended that we talk about that. It is a REIT. We don't have time for it today, but for whatever listener recommended that, we will try to hit it next week. That is another, well, it used to be a well-performing business, cheapest valuation ever in the stocks in like a line, a 70% drawdown. But we're running up on time, Ryan. Actually, a couple minutes long this week. So I guess you guys got some bonuses. But Ryan, anything else before we get out of here?
No, I think that's going to do it. We've got some awesome content scheduled on the podcast. So if you're still listening, I believe in 3 days of this being record or published to our podcast player, we're going to have in
Five. But
5 days. Sorry, we changed up the schedule. We'll have an interview on a very hot stock, controversial stock as well, with two really sharp fund managers that I highly recommend. I'll leave the tease there. I'm not going to name the company, but I
we
think
also
that's
have
going to do it.
we have an investor overview on Joel Greenblatt. We're gonna be reading his book. I don't think I've read it. Ryan, have you read it before?
I'm reading it right now,
All right,
prepping for
beautiful.
the
Yeah, short.
episode.
Yeah, gonna be yep. Right before recording the episode. That's what I'm doing too. Thank you to our sponsors, Interactive Brokers, FinChat, and Blue Chippers Club. And make sure to check out those links in the show note. As a disclosure, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I are any podcast guests, may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in to the live podcast recording. See you next time.